A brutal day for anyone with a 401k. It was the kind of cascade we haven't seen since the crash of 2008, a 634-point drop in the Dow, slamming markets all around the world with a giant wave that's been building since Friday night, when S&P downgraded America's AAA credit rating for the first time in history. The markets were already dropping at midday when the president tried to reassure investors and rebuke the S&P.
No matter what some agency may say, we've always been and always will be a AAA country.
But the Dow kept falling, another 200 points to the lowest close in 10 months and the sixth biggest point drop ever. So tonight we ask, can anything stop this stock slide? Will it trigger another recession? And what should you do with your money right now? From Wall Street to the White House, our team is covering it all tonight, starting with ABC's Bianna Golodryga at the New York Stock Exchange. Good evening, Bianna.
Good evening, George. A sea of red on Wall Street. You know, we've been speculating for weeks about how the market would react to the loss of a AAA rating. Well, this evening, we got our answer. It was a day of sheer panic and more downgrades from S&P.
It's a historic 1-2 punch, a downgrade, and then a massive global stock market sell-off. From Tokyo down 2% to London down 3% to New York down almost 6%, extending a 12-day sell-off that's erased more than 15% from the Dow.
On any given day, the ebb and flow of the stock market is all about confidence, and right now there's no confidence.
In total, more than $2 trillion in stock market wealth wiped out thanks to uncertainty about the national debt and S&P's downgrade. For the average investor, it's an expensive hit to the bottom line, some $16,500 erased from their 401k statements. It's all adding to the economic gloom as the nation feels like it's slipping back toward recession.
Businesses and consumers react by pulling back and retrenching at this point, then the odds of recession go up very, very quickly.
Beyond the stock market losses, the downgrade will likely hit American families' bottom line in other ways. S&P downgraded mortgage giants Fannie Mae and Freddie Mac today, a move likely to increase the cost of buying a new home by tens of thousands of dollars and damage an already fragile housing market. Beyond mortgages, rates for basic consumer borrowing could go up too, from credit cards to student loans. And as consumers are forced to pay more, the economy will slow, putting jobs at risk.
If interest rates, in fact, do go up, 1% rise in interest rates equates to about 1 million job losses here in America.
And George, what's possibly even more alarming than the headwinds we are currently facing is the lack of solutions out there to fix them, which is why all eyes will be on the Federal Reserve meeting tomorrow to see if Ben Bernanke can help prevent a second recession.
Okay, Bianna, thanks. So let's bring that question now to one of our experts, Diane Swank, the chief economist at Messero Financial. And Diane, I was reading today, economists who've looked at this said that after the kind of financial crisis we've been through in the last couple of years, about half the time a second recession comes. How likely is it this time?
Well, certainly the risk just went up with the downgrade of Standard & Poor's of U.S. credit rating. That made added insult to injury to an economy that was already growing at a stall speed. I think the most likely scenario is that we continue to chug along or muddle along in this economy rather than fall into a double-dip recession, but that provides little solace for the millions that are still not only unemployed, but have been unemployed for several years now.
Does the government have any tools left to help those unemployed?
They certainly have tools on the margin. By extending the unemployment insurance and keeping them engaged in the labor market, that's very important for spending in the U.S. And without it, we could have even bigger losses in revenue. So I think, frankly, that Congress should come back early from its recess. We cannot wait until September 7th to figure out the next tranche of deficit reduction. The one thing Wall Street and Main Street needs most is a plan.
And, you know, it was such a tough day today, a drop of more than 600 points, the worst drop since the crisis in 2008, but we're still several thousand points above where the market was at its bottom in March 2009.
Absolutely. And as hard as it is, and this has been a very hard and rocky road, there are opportunities out there. And I think the best thing for people to do is just to keep believing in the American economy. It's certainly not an investment advisor, but the best advice I can follow is my own, and that is hold on for the long term and bet on the long-term American ability to deliver profits.
Okay, Diane Swank, thanks very much.
Thank you.